Well, it seems that Greece is still the word the markets are waiting for more confirmation on a European Union plan to help bail out Greece's sovereign debt. Well, to find out how those dramas in Europe are being interpreted by the bond markets, Stephen Nash from FIIG Securities joins us now. Stephen, thanks so much for coming in. Just put it in perspective. Is this something that we should really be concerned about, all of these new concerns about sovereign debt in Europe?
Well, I think countries like Greece have had elevated levels of debt for quite some time, so it's really nothing, it's not a new story. There are other countries that have higher levels of debt. Japan, Italy are examples. Yes, Greece has had some difficulties recently with regard to their budget, and there's some discipline that needs to be exerted, and I think the forthcoming meeting in Europe should sort these problems out, and I think there's going to be quite a bit of support for Greece shown. So
why then are we so focused on this issue of Greece right now?
Well, I think people are trying to explain what's happening to growth expectations and why are they falling, and why are equity markets coming off as well. So people are looking to the Greece issue. Yes, that's important, but I think the thing that started this was the talk of regulation in the US, particularly the banking system. And I think what needs to be done there is probably people to back off, or the regulators to back off in the short term, so that expectations can stabilise again. I think obviously there needs to be regulation, but right now it's a very fragile period for global stock markets.
Okay, so how is this all being played out in the bond market?
In terms of the bond market, we've seen Greek bonds widen significantly relative to German bonds, but the recent talk of support has seen the Greek bonds rally back in, and probably expect that the Greeks should trade a little bit closer to the German bonds.
Okay, so the banking sector has been adjusting to the withdrawal of the guarantee deposit in Greece. So how would you rate the government's strategy on the guarantee?
In the local guarantee you're referring to?
Yes.
I think the last year, when everything was quite calm, that withdrawal of the guarantee was probably a good thing to do. In this current environment, it seems a little bit odd that they withdraw it in the middle of concerns about global growth. However, the banking system should be able to withstand it quite easily. It is a reduction in the diversity of funding that banks have, but I imagine it can be easily reintroduced if it was required.
So what do you think that this meeting in Europe that's taking place, we saw Jean-Claude Trichet leaving Sydney to go back to Europe, what do you think is going to be discussed and what will eventually come out of it?
I imagine that there'll be significant support shown for Greece, and that there won't be any possibility of a default in Greek debt. I think the European community is aware of possible contagion issues, as the authorities in the US have been for some time. So I imagine that this issue will probably blow over, so to speak.
Okay. So how about other issues affecting the bond market right now? What's the sentiment like?
Well, what's been happening is that because of the revisions down in growth expectations, bonds have been rallying quite a bit. We've had a bit of a reversal very recently of that, but the general theme has been a reduction in growth expectations and bonds rallying. Yeah. Okay.
Turning to the economy, appears to be a real disconnect between sentiment about the domestic economy and what's happening internationally. Of course, we're waiting for some of those employment numbers out later today, and all signs are pointing to more positivity coming off that surprise rise in December. So, just give us your perspective on what investors should really be focusing on right now.
Well, I think domestic investors have been focused probably on these domestic issues probably too much. And we've had a lot of stimulation last year. There's a lot of momentum in the economy, and yes, there is a good argument for further tightening. But what's really changed is the global situation and the global revision down of growth expectations. So I think the global picture is something that people should really focus on right now. If we get continued weakness in global growth expectations, I imagine the RBA will back off tightening. So I think that's the thing for people to really focus on right now.
And do you have any expectations from the employment numbers that are out later today?
Well, I expect some sort of moderation from what, I've had quite a good series of releases, and I imagine there's going to be some moderation. So, yeah.
Yeah, it can't sort of keep going this quickly indefinitely.
Yeah, yeah.
All right. I think we'll just leave it there. We're running out of time. Thanks so much for coming in. Stephen Nash from FIIG Securities.